This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Click the link in the description below and get yourself a copy of the Smart Money Manuscript. Good evening, everybody. If this is your first time tuning into Tim's Tidbits, let me check my mic. Mic check. My mic sounds nice. Check 1. Had to check my volume on my microphone. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning into Tim's Tidbits, I still want to say welcome. And I want to give you a nice hearty thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot of you to hablo español. And you're in tune to another episode of the Intraday Price Action Recap. What is the Intraday Price Action Recap? It's when I and you get together and we look at the charts and we see, hey, how did our analysis play out today? When we looked at the charts this weekend, when we looked at them yesterday, whenever the last time we looked at them and we said, if price does this, then it should do that. And we go back and we study the price. Why do we go back and study the price? Because it's training our eyes to see the things once they've happened and see how closely were we in predicting what was going to happen. Because if you don't look at price before it happens and says, okay, if price did this over here, it should do that over there, right? If you just wait until it happens and say, oh, I see what it happens, you will never learn to trust your own analysis. You will always second guess yourself. Always, trust me. Until you start to predict what price should do, you will never be able to trust your setup. Because you're always going to second guess, oh, is it going to work? Is it going to work? Is it going to work? You have to go on Amazon right? Do this right here. If you're a note taker, right? Do this. I want you to go on Amazon right now, right? Amazon Prime, regular Amazon, it don't matter. Go on Amazon right now. And I want you to find anyone that's selling a TARDIS, right? If they're selling a TARDIS, you want to get you one, right? That way, that way, you can zip to the future, see what price is going to do, zip back, and then come and place your trades. If you don't want to put in the work and learn the concepts, go buy you a TARDIS right now. Go, go order you one right now. Uh, speaking of the TARDIS, speaking of the TARDIS, uh, where did I put it? Let me show y'all my new smart money mentorship background. That what did I save it? That'll be using with the high schoolers. Let me share my screen. This is my old one. I'll shout y'all out in a minute. This is my old one here. All right. This is the old one here that I was using. My smart money mentorship. Right. This is the one I was using throughout, right? The first half of the first part of the mandatory part of the mentorship. Now we're getting into the part for any of the young adults that want to learn how to actually trade, meaning they want to learn the ICT concepts and actually learn how to trade stocks, options, futures. They want to actually learn how to be a trader. That's the portion we're moving into. And right now, all of them was like, hey, I want to learn. So we're still continuing on with that. So now, instead of just having the book in the brain with the that right there, now I've changed it, but I'm trying to find it. Find where did I save the picture at? Did I not save it? It should have been like right up here at the top. Up here. Let me see. Smart money mentorship. No, I didn't put it in here. Okay. I didn't put it in there. Man, did I not save it? Let me see if I didn't save it. Let me open up my Photoshop.
My phone. I'm trying to connect to my. Uh,
It don't matter to me what you're trying to connect to. Just go ahead and connect. That's what I'm saying. um, man, where did it go? No, it's not inside there. It's not inside there because that's the recent Tradify. Not inside there. Man, it's gonna drive me crazy. It ain't even that important either. But now since I'm looking for it, y'all know how I get. When I start looking for something and I can't find it, y'all know how I get. Look for my source file. I don't see my source files over here. What's my source files? Just tweaking. Documents. Oh my God. D drive. Source files. It's gonna drive me crazy. I can't do nothing right now. I'm heated. I don't know where I saved this thing at. Do a search. That's Premiere Pro. I need Photoshop. Oh wow. Let's see here. I know I put it in. Oh, you know what? I know I put it inside. I know I put it inside the thing where I be doing the what's the name with them. I put it inside the I put it inside the Zoom where I be doing it with them. But I don't know where. I put it inside Zoom. I know I put it inside Zoom where I be doing the mentorship with them. Uh, settings. Right. Go settings, video effect, virtual backgrounds. Where in the world is it? It's not even in the Zoom. Oh, virtual background. Yeah, it's not even in the Zoom. Where did it go? I'm 38 hot right now. I'm 38 hot right now. Oh, you know what? I think I was about to start doing it and I never finished it. I never finished. I put it. Oh, there. Yes. I started it on my phone and I never. Oh, okay. I was getting hot. I started it on my phone and I never finished on the what's name. Okay. Boy, 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 boy. All right. Yeah. I started it on my phone. All right. Anyway. Okay. Mystery solved. But I started on my phone and I just didn't finish it. Yeah. I ain't got it all the way done yet. All right. Got the TARDIS up there in the corner with the background with the stock charts. Right. And for those who don't know, the TARDIS is that's that time travel thing that they be using on Doctor Who. But I didn't finish it. I started it on my phone. That's what it was. Mystery solved. Now I can go back to doing matter of fact, do this right here. I can go back to doing what I go back to doing what I supposed to be doing now. Who we got up in here? Now that I done separated the wheat from the tear, who we got in here? I see Marco up in here, Lump up in here, Mike Pence fly up in here with Empire Traders, Seawalk up in here, Yolanda up in here. We all know Yolanda in here. We got Kim up in here, here to learn and share. Got Valentine up in here. We got Johnny J up in here, not to be confused with John iPhone, the crank yanker. Johnny, hey, y'all blame Johnny J for that the other day. Everybody who got caught off guard, let me share my screen. Everybody who was caught off guard, like me, by the crank yanker, y'all see this name right over here? It's their fault. Right there. Johnny J. When the crank yanker came in, it said John iPhone. And I thought it was John. As soon as I let him in, yep, we all know what happened. Shout out Sam. I think that was Sam I saw. I think I saw Sam over there. Was that Sam? Yes. Shout out Sam. Hey man, did Price do anything today that caught you off guard? Hmm? Did Price do anything today that caught you off guard? Did you expect Price to sell off? Did you expect Price to rally, but it didn't? Did you expect Price to chop and it ran off without you? Did you expect Price to come back to a certain PD array and you got left at the bus stop? All right. Talk to me. Talk to me. I know everybody couldn't possibly have known exactly what Price was going to do today. Something had to catch somebody off guard. You know why I say that? Because with every trade that's taken, somebody wins and somebody loses. Every trade. There's not a trade that hasn't been taken where there wasn't a winner and a loser. Mm. Price reacted off an anticipatory reactionary point. Okay, Sam. Price does that a lot. So you didn't expect Price to react off an anticipatory reactionary point? Mm-hmm. Typically, we expect Price to react off of an anticipatory reactionary point. So I said, hey, did Price do anything that caught you off guard? And you said Price reacted off of a ARP. So you didn't expect it to, you wanted it to not react off the ARP. Hmm?
I thought we might go down a little further. So one or to that original like 20 day that became kind of like in the 40-day range. I thought we might take a little more liquidity based on that daily before we took off. But I mean, it did, so to speak, not a surprise, but I did think that we would take a little more before bouncing. And so it leads me to my question. Every day, do we go forward and move our 20-day look back, or do we do it a week at a time?
I just stick with I don't change it until we do something significant within it. Like I just leave it because that's the as long as I'm still in that dealing range, right? I don't move it. I don't change it. I don't move it. As long as we're still in that dealing range. The only thing I'll do, as you see, is like once we go so far, I change it from I change the name of it from the 20-day to the 40-day to the 60-day if I need to, right? But I don't change the dealing range as long as we're within it, as long as we're within that dealing range. Because if you go and change it every single day, it's like you're doing extra work really for nothing. You know what I'm saying? To be honest, really for nothing, unless price is just like zooming. If price is zooming and trading outside of that range, then you know what I'm saying, you'll want to adjust the high or low then. But if you're still within it, nah, you don't want to continuously just keep going out and be like, oh, let me look. But you ain't got to be like that precise. Like, oh, another day is added. Let me look at my 20-day. Another day added. Let me look at my 20. Nah, you ain't got to be that precise because you already got your draw, right? You got your draw. You got your bullish draw. You got your bearish draw. And so now you're looking at, you know what I'm saying, the PD arrays within there, because you're not just looking at the high and low. You're looking at all the PD arrays that's inside there too. Right. You're looking at your imbalances. You're looking at your breakers. You're looking at your, you know what I'm saying? You're looking at inefficiencies. You're looking at order block theory. You're looking at liquidity. You're looking at all of that. inside that 20-day look back.
Okay, so that's why I had my 20-day low for that October the 10th, which was the low of that range. But that weekly order block kind of supersedes that. So you kind of start looking for that sensitivity within there and have in the back of your mind it may not reach to that sell side within that 20 day.
I mean, on the chart, on the chart, we traded below the low 20 days back.
When you put it on the daily, because maybe I marked it wrong because I had my 20 day is at that low going up to that low right there. The last low, yeah, that one. The October the see this long red candle
Here
over to your left, the long red over to your left.
to my left,
Yeah. So that the I had that as my
this,
yes, as the
that
low of
was
that range is the 20 day
that,
initially is what I
yeah,
had when I
yeah,
first
that was the 20-day, that was a 20-day low right there. But
right. So
now
we
that
never
now the
reached it.
now the 20-day low is here. Now this is inside the 40-day.
So that's what I'm saying. When did you
I never moved it. That's what I'm saying. I never moved. I just changed the name of it. I never moved that low because we're still inside that range there. So now it's no longer 20 days back. It's within 40 days now.
so that's what I'm saying. We could once those days as we keep moving forward, so to speak, in time, we come back and we can change that name based on the days, right?
Yeah, you're not moving the
Okay.
low.
I
You
know, no, I
just,
know.
yeah, you
Yeah, I
just,
was saying because I kept naming it, so to speak, the 20 days. So that's why I still had it as my target. So
yeah, yeah.
because we
So
had
this,
proceeded in time, it moved into the slot, so to speak, of 40 days, is what you're saying.
yes,
Okay. All right. Now I
yeah,
understand. Thank you.
yeah. Because if I click here on that right there and I go forward, oh, I got the wrong tool. All right. If I click on that day, man, if I go one day before and I stretch out to 40 days, see, now where we at now, like right here, now we're starting to ease out into 60 days now. You see what I'm saying? Because we're going further and further into the future. When we started out, this was our 20-day range, right? This was our 20-day range, our low, our high, right? And inside that range, we got inefficiencies, we got order block theory, we got all of that, right? And then within 20 days, remember we had come down to a certain point, right? We come here. Let's go back 20 days right there, right? So this was from, I'm tweaking. I need to go from when we marked it this day here, right? So from there, if we go forward 20 days, right? Within 20 days, we have come like all the way down in this area, right? From our original 20-day look back. But since we're moving into the future, now this is no longer 20 days back from where we are now. This is now with this, it's moved into 60 days back. Where here I got it named 40 day because here, if I come in here, I go there, I got a 40 day, I got a 20 day, right? That was my 20-day look back there because I think what was the lowest low? Uh that right there was the lowest low when I marked that as the 20-day. So that low to that high, right? Yeah, that was the lowest low when I marked that as the 20-day. And then I got a 60-day, right? That's the 60-day low back there, right? When I marked it out. And then now, right? Now, this right here, that's just internal liquidity for my 60-day look back, right? Where it started out as my original 20-day look back. You know what I'm saying? This is my original 20-day look back. And from when I marked it, right? You're looking at what price does with all the inefficiencies in order block theory and a potential draw into one of these liquidity pools, right? So when we started coming here and we say, okay, We anticipating this to be a smart money reversal when we mark this out because of whatever reasons we had said. We had come up to an anticipatory reactionary point. We right, and so we're looking for it to trade down to a certain level of liquidity. This was our lowest low, right? If this is our lowest low within 20 days from here, right, we got the potential of possibly drawing into that liquidity, right? Do we have to get there? No, you never have to get there, but we got inefficiencies and we got order block theory that's resting inside here. So the first thing you want to see is it reprice the inefficiencies within those 20 days, right? You want to see it start to engage liquidity within them 20 days, preferably. You know what I'm saying? From when you first marked it out, preferably see it start to engage liquidity within them 20 days, right? Even if it's all the way down to the lowest low or coming down and going back to the highest high, right? Whatever it is, you're looking for price. And remember, you're looking for the bulk of your trading opportunities. I'm looking at my 60-day. Let me come back here. This was my original. This was my original 20-day right here, right? You're looking for the bulk of your trading opportunities inside here, right? That's the bulk of your trading opportunities right there. And if you notice there, right, we had to use the upper quadrant as resistance for a short down to the lower quadrant, use the lower quadrant as support for a long back to the upper quadrant, use the upper quadrant as resistance down to the lower quadrant, right? The bulk of your trading opportunities inside that range, right? You look for it there. Now we came down into this internal liquidity within this range there, right? Start to move back up today, right? So looking now again, we're in this sell program, right? Not trying to pick a bottom, but we also remembering that we're in an overall buy program, right? So whenever we come down to discount PD arrays, right, and we see discount sensitivity, right, you have to remember we are in a higher time frame buy program, right? And we're still seeing discount sensitivity when we come down to discount PD arrays, right? Um, yeah. So you don't move your like day by day, you don't move your range unless you trade outside of it. Then you adjust your range and be like, okay, now this is my, you know what I'm saying? This is the current look back range, right? You leave the range in place, but then if you coming in right now, you know what I'm saying? That's that if you came in right here on this day, that's part of your 40-day look back. And this right here might have been your 20-day look back or something. You know what I'm saying? Like if you came to the charts right here on this day, right? That red day there, and you move 20-day look back, that right there would have been your lowest low for the 20-day look back right there. If you just came in, right? If you just came in, that would have been the low. And then your 20-day look back low would have been engaged within 20 days. You know what I'm saying? If you just started looking at price right here, right? Because we came down and we took out that low, right? Matter of fact, it would have been engaged in 2 days, right? If you came in this day, what, 3 with a quick little Judas swing, right? Well, actually a wig snatcher because we opened up, traded down one day, traded back up above the high, then traded back down again, right, into the liquidity. Okay. So when you traded down, traded back up, started coming back down, opportunity right here, trade into the low, right? The wig snatcher on the daily time frame right there. Okay. Um, and what I mean by that, we opened, right? Took out sell side, right? Came back up, open here, took out buy side, right? That's a Judas swing. Then we trade back down here, right? Now we're coming back down, right? We didn't take out that low right there, but we've, you know what I'm saying? We've reversed and we're closing very heavy into this downside right there, still looking bearish in the sell program. So the reaction off this lower quadrant of this right here with this retracement back up, followed by the open the next day with this retracement back up close to the upper quadrant, you know what I'm saying? That's the retracement for the opportunity to go short, right? Coming back up into a premium, coming down, taking out the low. Okay. All right, T.
So I understood everything you were saying. My question, like you said, if I came in at a different date and I started my 20 days differently, is there something that could key a person in and why one may be more higher probability than the other?
Ain't
You
no
get what
such
I'm
thing.
asking? No
Ain't no
such
such
thing.
thing.
So,
No.
like, say for instance, you came in at the all that 2 days after the all-time high and start counting back. I think that's where I started counting around that area.
Mm-hmm.
And then somebody else came in maybe last week. Does it make sense to you
Yeah, I hear what you're
what I'm
saying.
saying?
Yeah.
So you still just say we'll say whatever's in that kind of relative range. Is that
Yeah,
what you
that
said?
that don't
Okay.
exist. That
Okay.
like when you come in, whenever you come in inside here,
Yeah.
don't matter because
Okay.
that's still the highest high and that's still the lowest low. That price
Okay.
is inside of. So we're still trading inside of this range.
Right.
You see what I'm saying? So
Yeah.
since we're still trading inside of this range, anything that happens inside here is based off of this range right here, no matter when you start looking back.
Okay.
You
So
see what I'm
even if
saying?
my 20, like say my 20 days went further, I really don't want to look, you said look past this range because that's the range we in and that's gonna take precedent.
Yes, because we're
Okay.
inside this dealing range right here. Everything else that's inside there, 20 day, 40 day, 1 day, 2 day, it's all like a part of this. You see what I'm saying? It's all a part of this. So you're still inside this range right here. So long as you're inside this range right here, right? It don't matter if you because like I said, if you came in right here and you went 20 days back, right? If I go 20 days back, okay, and then just get this right here, right? This is my highest high, and this right here is the lowest low 20 days back. All right. So now if I hide my 40-day look back, right? What has changed in as far as how price is moving down to this low right here? You know what I'm saying? Because I'm looking at this piece of price as opposed to that piece of price. Nothing. You see what I'm saying? Nothing has changed in accordance to how price is moving, right? And the only thing that if you notice, right, when you look at it, like coming from like once we came down, see, we came here and we took out that low, right? That's a significant, this right here is a significant move right there. So coming in after this day here, we're dropping down. Price is really heavy right here. So start counting this day and 20 days back, right? You can see that price is just a little bit more precise on what it's doing, right? Because we got a closure right there, open right there on that quadrant right there. You know what I'm saying? Then we came down and poke below that low, and then we got a nice rally up, right? Because we're taking out that liquidity right there from 20 days back from this day here, right? After we started making a significant break below this area right here, right? We're getting a significant break below all of this um efficiently delivered area there. So now all of this right here is a balanced price range. When we get a significant break below that, right, now we're coming down and we're taking out that liquidity, right, for the lower portion of that 20-day look back. But ain't nothing changed about it because in this look back right here, that's just internal liquidity that you're looking to get swept anyway. Just like when I marked out my 20-day look back, right? The lowest low was there, right? When I marked out the 20-day look back, right? This was like the lowest low or something like that. I can, what was it? Yeah. So from here to that, yeah, right. So that's the lowest low right there. I don't even know how that's the lowest low. Oh, you know what? I probably did it back. Yeah. Yeah. Right there. If I go right there, yeah, I probably did it right there. Right. So that's the lowest low. If I come here, because that low wasn't in it. Right. So that low wasn't in it. So whatever day makes that be the lowest low. Right. Yeah. Yeah, so that low wasn't in it. So whatever, yeah, right there. Whatever day either there, I know I had it there for like a couple of days anyway. So Friday, that's Monday, right? So I probably redid it with the weekend chart prep, right? Including Friday, that right there was the lowest low. So with this right here being my lowest low, like 20 days back, right? What is this low over here? That's relative equal lows, right? I got relative equal lows inside of my 40-day look back in conjunction with my 20-day look back low. You see what I'm saying? So no matter where I start looking back, long as I'm inside this range, there's no such thing as this is more significant than that. The only way you want to look at it as being more significant is that the algorithm looks 20 days back first, then 40 days back, then 60 days back, right? It's looking back for liquidity and inefficiencies 20, then 40, then 60, right? If you look at it like that, then you can say, okay, the 20-day takes precedence for when it's looking back for liquidity first. Then the 40-day takes precedence. Then the 60-day. All right. All right. So just like when we was in this area here, right? Notice here, right? So we got our this low. See this low right here, right? So that low there will come. This right here. Let me see here. This was our get my line together. All right. So I'm hide all this. So I got a lot going on. All right. So come down here. All right. So we'll go back. Okay. So we come. Uh-oh. Not moving. All right. So okay. So when we if you look here, right? Once we come, all right, from this day here, all right. So from this day right here, right after we close this candle right here, right? So now we're looking 20 days back, right? We're looking 20 days back. So from this day right here, right? This still the lowest low. This still the highest high, right? 20 days back. Okay. But notice once we come through down below this liquidity right here within this 20-day range right there, right? We get a strong reaction off of there, right? And then we start coming back down again right there. And so once we come over here, right? Once this day right here closes, right? This right here, that's our lowest low 20 days back, right? That's our lowest low 20 days back now. This is no longer the lowest low 20 days back, right? But then once we come down below this low right here, right, we get a strong reaction off of it. And the reaction is not as strong as this one was, right? It's not as strong as that one was. Why? Because when we came from up here, right, we absorbed a lot of liquidity from there, right? Because why? Price had been going up for a whole lot longer. So more and more stops were getting pulled under here because it went up for a really long time, right? So we absorbed a whole lot of stops up under that low and we got a strong reaction off of it. All right. Then once we came back here just a couple of days later and came below that liquidity within the 20-day look back, because that's our 20-day look back there, right? Come here, go put it on the actual low, right? We after we had yeah, after that low right there, after that candle closed, right? Then we traded below a low within our 20-day look back, got a reaction off of it, right? So now once we come there, right? Now that's our lowest low. No, let me come here. Yeah, 20 days. Yeah, that's our lowest low right here. 20 days back, right there, right? And then this low right here is within our 40 days look back. All right. So we stretch this out. I'll leave that there. All right. So from this day here, right, this is now our lowest low 20 days back. And this is our lowest low 40 days back. But that's um a low within 40 days. All right. And this right here, it's just 1 day. So you can also count it as, yeah, that's 20 days because it's just 1 day off. You ain't got to be like uber specific like that, right? Because it's in close proximity. Because this right here, you have this low, you got that low, and this low right here is just 1 day away. But when we trade below that low right there, right? Now we've gone below a low that's within the 40-day look back range. And right, this right here is an important low. You see what I'm saying? This is an important low right there. All right. So we come down, take out that liquidity, then we get a nice rejection off of it, right? And this right here is an important low that we trade into. Does that mean we can't take it? No, it don't. But it's like once we come into certain liquidity, right? You're gonna get certain reactions. And then on top of that, when we're looking at that range, right, we've come down to that lower quadrant and swept liquidity. So what we're getting like a deeper pullback, right? And we're going right now, we're going back. First time we hit it, we went back up to the upper quadrant, right? Second time we hit it, we went back to the equilibrium. This time we came down, swept liquidity, and now we're heading back to equilibrium. Okay, so now we've taken pretty much two levels of liquidity, short-term liquidity and intermediate, you know what I'm saying, intermediate term liquidity, if you want to call it that, right? Because it's a little bit further back, right? It's a little bit further back in time here. Okay. And it also completes a market maker sell model inside of this market maker sell model, right? And the same thing over here, right? Once we trade it below that low right there, right? Once we traded below that low right there, we completed a market maker sell model. right at that lower quadrant, got a deeper retrace up, right? When we traded below that low right there, we completed a market maker sell model below that low right there and got a deeper retracement up right there. When we traded below that low right there, we completed a market maker sell model and got a deeper retracement up, right? No matter how you slice the pie, right? No matter what part, that's why I would say all of the concepts are telling you the same thing. It's just different ways to look at it, right? Y'all used to hear me say all the time, for me, everything is rooted in market maker models. Everything about price is rooted in market maker models, right? The power of three, with accumulation, manipulation, distribution, with the order flow, price delivery, everything is incorporated inside the market maker models, right? But with everything being incorporated inside the market maker models, in my mind, what that means everything is the same thing, right? It's just different ways of looking at it, different ways. How does your eye see it? Same thing with the PD arrays. Fair value gaps are no better than breakers. Breakers are no better than order blocks. Order blocks are no better than swing highs and swing lows. There's no PD array that's better than the other one, right? But they all serve a specific purpose. And as long as you understand what that purpose serves, then you know how to use them, right? I don't know. Kind of got lost in the ramble somewhere, but hopefully y'all got something out of that. I took everything off the let me see if I can undo enough to get back to how I had my stuff set. Nope. Oh, wait a minute, still moving. Still moving. Okay. Yes. Yes. All right. If y'all can hear my son back there having a whole concert, that Jolly Pies. Man, we done took off tonight. That's the day's calendar. Look how far we up. Man, I didn't realize price was shooting up like that. Anyway, um, who's that? Sam. What did price react off of that caught you off guard? You said it reacted off of something. What is it that it reacted off of? And Yolanda, you said you were expecting it to take out more lows. What you talk about? Yesterday's low, Tuesday's low. That's what you was anticipating to take out.
No, I was still until you just explained it to me, and now it makes perfect sense. I knew you had moved it, but I should have asked before because I wasn't understanding how that 20-day, so to speak, had moved. So I was still expecting the bottom of the range like a wick and then go. So on that daily, I was still like within that range. But the way when you just explained it and was showing how once it took out a significant low, you could kind of move your range some, and then those other lows were significant. So
So that's what I'm
that
saying.
makes sense.
You was wanting it to come take out this low right here.
That's not yesterday's. I'm talking about that. I'm still on that daily low from back in October.
That's yesterday low. What low you talking about? Over
Go
here?
back to the daily. Is that the one from October to what's the date on that? Let's
October the
see.
10th.
Yes, yes.
So you was anticipating to take out October 10th low before giving some
Before
type
we,
of.
yeah, but you now that you explain it, it makes sense now. I was looking at it wrong because that was like once you
Nah.
took out a significant low, that retrace is expected. So that makes sense. Plus,
Well, you don't
you
want to
okay?
say you don't want to say you was looking at it wrong. You know what I'm saying? Because if this is your anticipated draw, right? It's not that you're looking at it wrong. It's just that we always got to remember that it don't have to get there when we want it to get there, and it don't have to get there at all. You know what I'm saying? So what do we what do we always say whenever we take out any liquidity, right? Whenever we trade below any low or above any high, right?
So at least a retrace. Yep.
Yeah, a
Yep.
retrace.
Yep.
There's a high possibility of a retrace, and there's a high possibility of a full out reversal. Why? Because we're taking out a liquidity pool, and what
Yeah.
are liquidity pools tied to? Liquidity pools are tied to reversals. So if we're taking out a liquidity pool, we got to always anticipate the possibility of a retracement. Not saying it is going to happen, but we just always anticipate it. That's why we take. That's why we pick low hanging fruit, because there's always a possibility of a retracement. Okay. And so it's not that you're not that you're looking at it wrong, or don't say I'm looking at it wrong. Why? Because that's a draw on liquidity. Okay. And what we always talk about, in a sell program, you never try to pick the bottom. In a buy program, you never try to pick the top. We just look at the signatures that price is giving us when we get to anticipatory reactionary points. When we get there, are we still um respecting bearish order flow, or are we starting to respect bullish order flow? When we get there, are we still respecting bearish order flow, or are we respecting bullish order flow? When we get here, same thing. You know what I'm saying? You just look, whenever you hit liquidity, now you're looking to say, hey, are we respecting bearish order flow still, or bullish order flow in the case of when you're going up, right? That's why y'all always hear me say, don't try to force price to reverse if you haven't taken out liquidity. You know what I'm saying? Just because it's gone a long way, don't mean that, oh, it's got to retrace back to a premium. No, it don't. You ain't even took out no liquidity, so why do it need to even come back up to equilibrium? Right? You ain't hit no liquidity yet. So um once we hit that liquidity, then you want to say, hey, are we still respecting bearish order flow, or are we have we moved into bullish order flow? Right? And then um I ain't gonna hold you. Price has been extremely difficult. Price ain't been easy this whole year. Like, price
Yeah.
ain't been easy. Price ain't been easy for the last 2 years at least. I know for a fact price has not been easy for at least the last 2, maybe 3 years. Because I know since I started on YouTube with the gang, I know I've been talking about how we done had so much divergence between the three sisters, right? I know for a fact that we've been talking about how difficult price been. Michael has even been saying for at least the last year and a half, this is the most difficult price action he's ever seen in the 30 years he's been doing this. Right? Price has been really hard. And what do I mean by price been really hard? Look at today, for example, right? Yeah, it was moving beautiful. It was moving beautiful throughout here. It's moving beautiful throughout there. It's moving beautiful throughout there. But look at these long throws. You see what I'm saying? Like, we're coming down, bearish, bearish, bearish. We take out that significant liquidity there, right? Then we trade back up. We come back down. Don't take out the low, right? And then we trade up, right? Take out buy side, right? We come here, wick down. That's a deep retracement for taking out that buy side, right? We go up, we take out more buy side, right? Then we come here, we wick up, take out the high, okay? Then we come all the way down, right? And take out a low right there, right? So from here, we got a bearish Judas swing, but then we reverse right back up, and it turns into a wig snatcher. You see what I'm saying? But we get these long hourly. Look at this 1 hour candle here. Straight, that 1 hour candle right there, from open to the high, was 239 points. And from peak to trough is 331 and a quarter points. That is a very large range candle. That's an extremely volatile move. It is very difficult to trade when price is moving that far at one fell swoop. If price is running up like this right here, where am I realistically going to put my stop loss if I'm trying to trade this to the upside? A
Yeah.
100 points? You know what I'm saying? Like you're looking at this large move and like, oh my God, you know what I'm saying? When am I going to get a chance to participate? Right. And then we come up here and we manipulate out this high and reject off of it. Right. But when we reject off of it, we come all the way down here. So imagine inside this range there, can you realistically trust, not just looking at this hour, it just say if you traded on the hourly time frame. When we pop back up in there, if you got short there, your stop has to be at least right here based off of what these candles are showing you right now. You know what I'm saying? So it's like it, and then you come down here and you get take out some lows, trade down below midnight, right? Trade down below midnight, but and we got an important low down here, right? And we don't take it out. We don't even take out this low right here, right? Then we come back up, and now once you respect this, now you can possibly come in here on a lower time frame and try to find something to participate off of if you're keen with what's going on this time frame, right? You could possibly come into this imbalance and look for something to say, okay, let me try to see if I could take an opportunity to trade something inside here, right? But when is this? This is going into the end of the day, right? And this right here is the last, this is after the close, right? This right here is after the close. This is the close of the day here, right? But this is all of this is after the close. So even if you're trying to look to participate in something over here, right? Unless you're buying options or got the money to hold overnight, and I don't suggest holding overnight during these conditions, right? You don't get a chance to participate in that. So price price has been very difficult for trading the concepts. Hasn't been impossible. You know what I'm saying? Hasn't been impossible, but it's just been very difficult. And you have to be very selective, and you have to be very in tune with what the algorithm is doing. And even if you're in tune with it, sometimes you end up in really long trades. Like I was looking at a video today when I was going to pick up Chris. I just skimmed through it because it was like an hour long. But Tremaine Trades took a short today, and he was in that trade for like over an hour. He took the trade at like 11:15, and it didn't hit his profit target on part of the majority of the position to like over an hour into the almost an hour into the trade, and then it came back and stopped this runner out in profit. And I think he was in the trade like maybe about an hour and 20 minutes overall. You know what I'm saying? But it's just one of the things where price chops around so much, and then it'll blast off making a move, chop around, blast off making a move. So if you're not in tune with what it's doing, and then you get in and have the wherewithal to sit through that chop, you know what I'm saying, knowing that I'm on the right side based off the signatures I'm seeing, is respecting the order flow, that I'm on the right side of order flow. It's just time distortion. If you ain't got the wherewithal to sit through that, you get shook out. You might panic out because it's like I sit there sometime on his live stream and I'm watching him trade, and I'm like, you better than me, nephew, because I would have took profit. And when it was at 40 points, I would have took profit. I'd have seen him, I'd have seen a trade run 60 points in his favor, come all the way back down, and he be only be 10 points in profit. Sometime it come all the way back down and go negative, just to turn around to go back up and hit like 100 points profit target. I'm not gonna let a trade come back from 60 points up all the way down to negative 10 points. I'm not doing it. I'm not doing it. I promise you I won't. But you know what I'm saying? Every trade is different. Anyway, that's neither here nor there. I done got the rambling again. Didn't really catch me off guard, but I saw how it reacted off CE of the monthly wick. Okay. Uh so as we see here last night on the hourly time frame, right? This is where we opened up right here, right? Last night we opened up, had a bullish opening. Okay. We traded up here, right? On the lower time frame, we took out some liquidity, right? We crossed back over the open, took out some liquidity, right? and then we start to rally up, right? Took that out, went down. Like we said, we traded up and took out um yesterday's high, right? Retraced back down, deep retracement back down into a discount, going back below the daily open, going back below true day open, right? Going back below 930 open, right? 930 open is in here somewhere, right? So we went back below all three openings right here on this 12 o'clock candle, and then going into the afternoon session, we came over here, manipulated out some sell side, and then rallied up after the bell closed, and closed right up there at the previous day's high, very far from where we actually closed at on the day, right? Very far. Like, matter of fact, we go to like a daily candle there, right? And I turn settlement off, right? Look at the difference in the candle, right? Between the settlement price, right? And that's the open, then turn the settlement price off. So between the settlement price and the actual close, 237 points, almost a full percent difference that it moved after the close, right? Was it because of Nvidia? I don't know, don't care, right? Was it because of Nvidia earnings? Is this rally still going up because of Nvidia earnings? I don't know and don't care. Why? Because we came down, right? Swept liquidity at a quadrant level of our if to look back range, right? And we got discount sensitivity off of that low right there. Right. Let's look at, we'll just go all the way down to a 5-minute chart. Right. Since we was on the what's name? We'll start out over here just on 930. Since we done been on so long, we'll just go at 930. Right. So at our 930 open here, we drop down at 930. Okay, came down, right? Did not take out our London low, right? We dropped down, set relative equal lows at London, right? We had this low marked out earlier on the tape reading session right there. That was our London low, right? We opened up at 930, dropped down, set relative equal lows with a prior session low, right? And then we rallied all the way up here, right? Up and took out the daily high, right? So now, whenever price, right? Whenever price engineers liquidity on the sell side, right? What do we want to see it do? Trade into some buy side and then come back and engage that sell side that it engineered. Okay. Engineered sell side, rallied up, traded up, right? Took out all this, right? We took out all this buy side here, right? And also took out the daily high. Okay. Notice as we was coming down, right? Not taking highs, not taking highs, not taking highs. Right here, took a high, right? Engineered lows, rallied up, took out all these highs. And then once we took out all them highs, right? See how efficiently delivered this is right here? What do we do? Slice through it like butter to take out that high, right? Once we slice through it like butter, taking out that high, what do we do? Slice through it like butter, coming back to take out that engineered liquidity right there, right? Where did we pause at? Right. Let's see what we paused at. When we drop down, right? What is this right here? Who can tell me what that is? This is a 5-minute chart, right? This is a 5-minute chart. What is this right here?
That's that first fair value gap coming out of first value gap of the session, and then coming almost out of that once we broke that structure. So it's
Yes.
that gap that aligns there.
Yep. So we're not looking at that one right there, because when we're looking at first presentations inside opening ranges, we're looking at displacement. All right, so we're inside our opening range. When we get our displacement above this area here, that's our first fair value gap leaving that displacement. So that right there is not our first presentation. That's our first presentation on this time frame here. When we come back, the algorithm identifies that and it stops. Right? Doesn't even make consequent encroachment there. Bounces back up off of it. Open here, trades down through and reprices it all the way to the bottom side. Bounces up off of it, closes above consequent encroachment. Do-to-dos up in here, trading back up into the fair value gap, right? Trade up again, reprice the fair value gap, and look where it's doing it at, right there at the upper quadrant of that daily discount wick, right there, right? And that's where that imbalance is, that daily discount wick. Come back down and close below it, right? Now that we've closed below it, now we're looking here. All this time here is defending that upper half, right? We're not getting back up into that upper half. Then we come here during this macro time, trade up above all these wicks right here, right? And close above the upper half, right? But then we start 12 o'clock during the macro time. We start that next hour, trade up above that high right there, can't make it to the high of the gap, and then poof, we dump right there, right? And then once we dump, hang out there at that low, then we drop down and take out that engineered liquidity that we engineered before going up, right? But that pause for the cause was at a significant PD array right there, right? That first presentation from 9:30 that the algorithm remembers, right? So we come down, take out that sell side liquidity. Once we take out that sell side liquidity right there, we drop down. Like we said, we're below the 9:30 open, right? We get below the 6 o'clock open. We get below the midnight open, right? We've come all the way down into a very deep discount below all of the openings of the day, right? Asian, London, true day, right? This below the New York, this is below the London, and then this is below true day, right? And this is below the Asian open, right? The open of the day. Right.
Tim, I
Yes.
got cut off. I know, so I understand why that's the first significant presentation. Does does that take anything away from that small gap below being a significant, even though we were being a deep discount? Does it take anything away from that small gap being high probability inversion? The one that was the first gap
This here.
before we took off?
You said does
Yes,
it take
I
any
know why.
you was breaking up, but are you saying does it take anything away from this being an inversion fair value gap because that's the first presentation? No.
Yeah. No, not the first presentation. It was that first gap before we went up to test liquidity.
Uh,
Does it, but you know how usually that first gap that goes to take liquidity, we see as a high probability inversion
yes.
once if we invert it.
Mm-hmm.
So but I'm saying because it now that we know in that session, the ones that are above taking, that takes the breaking structure. So now is that we ignore that one, so to speak?
No, you
Not as a first
no, no,
presentation, but as a
no,
high
no, you don't
probability
not this being the first presentation doesn't change that that's the first fair value gap. You see what I'm
going
saying?
up
So
before
so yeah. So this
okay.
is still this right here is still your inversion fair value gap right there. Right? Because once we get below it, see price trades back up into it and uses it to take us down into the God dog it. What did I just do? Okay. And takes us back down into the sell side. Okay. So it doesn't change the fact that this is the first fair value gap. Matter of fact, is there a space there? What's that close? Uh
It's some,
31,
it looked like it's some below there a little bit,
63,
huh?
63, I mean 31.50. And this open right here is 31.20. No, so there's no gap there. This
Uh,
open is 77.75. And then the close head 78, no gap there. Okay, so that right there, it doesn't change the fact that that's an inversion fair value gap because this is the first imbalance created before we went up, then came back down. And once we got below it, price traded up into it there, then took us down into the sell side right there. Right now, this right here being used as a inversion fair value gap because this is the first presentation and it come down and is used as support there. So once it's used as support, once you get below it, you anticipate it to be used as resistance, and then it pushes us down below that inversion right there. You see what I'm saying? So it doesn't change the significance of that. It's just that's my first presentation because that's the first one after 9:30 that came with displacement outside of this area right here. You see what I'm saying? So you don't ignore it. It's just now you know what's the significance of that and what's the significance of that. It's just like an added tool in your arsenal. You still there on your Samsung Note, on your Razor Flip?
This
Yeah,
this signal out here at this field is
that's
horrible.
that that's your Samsung Flip, your Razor Flip. That's what that is.
That's the old school technology.
Mm-hmm. Joke out there on a BlackBerry. All right. So let's look at this right here. Something I wanted to point out. All right. So we have, all right, y'all, like I say, you want to is time and price is fractal. So when we price is here, this is our day that we're trading in, right? As we're coming up, right? This is the deepest wick, right? So I got the quadrants placed on that. Excuse me, right? We're going up, right? Since we're going up, this is yesterday's premium wick, and this is yesterday's discount wick, right? I had this one graded. We traded down into it, but now that we're going up, I'm looking at the premium wick. Okay. Why am I not looking at this wick? Because this is the deeper wick, right? Why am I not looking at this wick? Because we ain't got there yet. So this is the premium wick I'm watching, and this is the discount wick I'm watching because we're trading back up into the range of both of these. Okay. Not looking at that because this is the deeper wick. Okay. If this wick had stopped right here, like that part didn't exist, then I would be looking at that wick, right? Because that wick is deeper than that wick right there. Okay. Now, looking at that, now let's go back down to the 5-minute time frame. Okay. When price trades up, right? When price trades up, when we're rallying up, right? Note, what do you notice here? What do you notice here? As we're on our way, before when we get above equilibrium, a consequent encroachment, I'm sorry, of that long red wick, this is the upper quadrant of that long red wick, right? And then this here is all the quadrants of the short wick from yesterday. Okay. We get above, right? Get above the low and above the lower quadrant and touch consequent encroachment. We trade back down below the lower quadrant, right? Use that support, push up, right? We get right there at the upper quadrant. We get a deeper retracement, right? Trade down through the imbalance, drop down below the lower quadrant. Like I say, price been very sloppy, overshooting everything, right? We overshoot the imbalance, right? But we don't go down below that low, and we definitely don't go down below the first candle. All right. So we get back up, right? Poke above the upper quadrant, right? We trade up, trade up above the high, and trade up into the upper quadrant of the other wick there, right? Then as we get ready to come back down to consequent encroachment of yesterday's wick, trade up, right? Then, well, first of all, we go up and don't take out the high. Then we trade down the consequent encroachment up, or whichever way we went. Maybe we went down first. I'm not sure, right? Just say we went down, then up, then close there. Cause that make more sense. Down, up, then close there, right? Open up here, respect the wick, right? Come down, then we close there. Open back up here at this 1030 candle, go up, manipulate a high, right? Come down where we at, right there at consequent encroachment, right? So we come down, we explore below the quadrant, right? Close there, come back up, use the high after manipulating liquidity as resistance, trade down below consequent encroachment, come back up, use the upper quadrant as resistance, trade back down, touch the low, come back up, use the lower quadrant as resistance, trade back down, right? Take out liquidity. Okay, open up, drop back down to consequent encroachment of the next day's wick. So on the way up, right? On the way up, we go from the lower quadrant all the way up above consequent encroachment. Then we stair step up the wicks, up the quadrants of yesterday's wick, right? Touch the upper quadrant, stair step down the quadrants of yesterday's wick, come back to consequent encroachment, then drop all the way back down to the lower quadrant. And then we drop down into that first presentation, right? And dilly dally there, right? Getting down below the inversion fair value gap, and then drop down into the sell side and the daily opens, right? But we notice how we're utilizing these daily time frames. I mean, these daily PD arrays for intraday price action, how it's respecting and utilizing these daily time frames based off of grading these different PD arrays, right? Great in the different PD arrays. So, like I say, it's you can if you're lucky enough to take an opportunity based off these quadrants, you could catch this stuff here, right? But if the way price has been trading, right, if you're not lucky enough to catch something based off the quadrants or based off of, other things in here, right, you're gonna watch this big move, then price gonna chop you to death because you think it's gonna keep going, right? And then you get on this side and you're scared to death to go long, right? Because you got chopped up, but you're scared to death to go short because it's chopping and it start dropping, then it's going back up on you. So you scared to death, like, oh man, as soon as we hit that low, now it's fun to go back up to the moon. Now you scared to take a short, and then it take off and peel off, and then you try to go short, and now it's chopping your head off again because it's going back up, trading above highs. You know what I'm saying? Now you like, oh my God, what am I gonna do? What's going on? Right? Because prices making these large moves, then it's hanging out. Large move, hanging out. You know what I'm saying? Making price very difficult. But if you got these key these daily levels on your chart, right? You can make educated trading decisions. And sometimes you just have to, if you're looking for larger moves, sometimes you have to sit through stuff like this, unless you're lucky enough to come in at just the right time. Because shout out Seawalk, he learned, he's been learning and noticing, hey man, price ain't just reacting at these macros. These macros, the spooling at these macros been trash lately. It's been spooling before the macros hit. It's spooling after the macros hit. Right? We getting these big runs, and it ain't even much the macro time. Right? But it ain't gonna always be like that. Just like y'all hear me say all the time, price does the Lord's work in different sessions. It's like it's times, You know what I'm saying? It's times to every set that every session is going to have those great trading opportunities. When I first started trading, the Asian session was beautiful. I said, man, I do not need to trade that old crazy New York morning with all that crazy volatility and moving all fast. The Asian session moving slow and beautiful. And man, I ain't got to worry about all them long wicks. Price just do what it's supposed to do without all that manipulation. And then the Asian session turned into doo-doo. Then it went through a phase of being beautiful during in London. I'm getting up to trade to London. And then after it went into a dry spell and I got up to trade to London for about 3 weeks and couldn't find a good trade and getting chopped up. I ain't been up to trade to London since. And then you go through them phases when a New York morning is great, but then a New York morning might be trash. Then a New York lunch might be beautiful, or then the New York afternoon might be beautiful, right? It just go through these waves sometimes. And when your trading window is running through a drought, hey man, it's hard to stay disciplined and not try to force trades because you're looking at this right here, like man, look at all that money. Look at all that money I missed. You ain't missed nothing. That probably ain't give you no opportunity to do nothing. Ain't give you no opportunity to do nothing. Just like this morning, we was watching this price go up. Price did everything we said it was gonna do without giving not one opportunity to get involved until it got like up here somewhere. Well, let me see if it was up there. Right. Cause I was like that order block should look at that. I almost hit it on the dot right here. Right there. Right. I remembered it was like right there by that quadrant. That's why, and I couldn't remember where it was at. Right. I know it was right by the quadrant. Right. When I pointed it out this morning, I was like, for low resistance liquidity runs, I say for a low resistance liquidity run, when we traded, we was trading right here. Right. Right up in these 1 minute candles right there. I said for low resistance liquidity runs, that order block should hold. Right. We traded back down right into that quadrant, right inside that order block. And then when we traded back up here, I said, okay, we done made a new order block inside that order block. We good right there. Then price eventually made it to that high. That wasn't even the high I was looking for. I was looking for some regular trading hour. Do I still got it in here? Regular trading hour buy side right there. That's the regular trading hour buy side right there that we was looking for right there. And then price ended up running far beyond that. All right, man. That's all I got. Anybody got any questions for me? Anybody confused on um I wonder if the sessions have seasonality too. Mm, I want to go back and back test that because I know it go through waves. Go back and back test and see when is the clean price action during the Asian. Is it the same time of the year? When is the clean price action in the London? Is it the same time of the year? Right. When I first started like really trading futures, right, it was like in the going into like the winter time. It was going into the winter time. I remember, and I really started taking it serious in like January 2021. Right. I started like learning around like Octoberish. It was somewhere around October, but I didn't take it really, really serious until like January 2021. Right. So during this time frame here that we're in, that's when I was like learning how to trade futures. And the Asian session was like it was winning. Right. So just go back and look, see when is the clean price action in the Asian? Is it do it got season? Is it like and um third quarter and second quarter? Or um fourth quarter and second quarter, first quarter and third quarter, right? Do it, you know what I'm saying? Do it hit like twice a year? One, you know what I'm saying? How do the how does it work out? Yeah. That's a good little study for somebody as studious as yourself. Uh, we notice you have spoken, so we notice you. What did I say? We notice you have spoken, so we. Yeah, what with the volume? Something just popped up. I saw something pop up. It said something about we noticed something, so we did something. It's something with the volume. Did my volume change? Do I sound different to y'all?
Sound the
It's a
same to
little
me.
low.
Somebody said it's a little low. I think that. Oh, that's my little buddy out here over there.
Yeah.
What's happening? What's going on, little one? What you gonna feed? What you gonna feed my little partner for Thanksgiving, Deborah?
Let's see. Some of everything, because he got teeth now. Woo.
Okay, since he got teeth, make sure you go to Honey Baked Ham and get him some of that roasted turkey in the like in a little container. It's already sliced up. Oh my
Uh-huh.
goodness, so delicious. Get him some of that. You ain't got to give him that big old nasty ham with the bone in it. Just get him that little roasted turkey, the one that's already sliced up in there. Get him some of that though. Then find you somebody who stay in South Florida and have them go to Knoxberry Farm down there in South Dade and send you some of those guava pies and
Mm,
some of those
you making me hungry.
oh man. Got to do the little man right. Got to get him right
Yeah.
for Thanksgiving. That's right. That's right.
Oh my God.
Y'all, hey man, that's all I got, man. Um, hopefully y'all, it's starting to click and see like when you when you pay attention to these key PD arrays on a daily time frame, it can give you valuable insight to for your intraday trading, not just in one session, but throughout the entire day. Right? Remember what Michael always say: his PD rates don't go stale. So if price is trading in that range, right? Pull those PD arrays up because you put it on there for a reason. The reason why you put it on your chart is because the algorithm did something specific, right? We didn't just go and get the magic rectangle tool that we bought off of Amazon, right? We looked at what price did. We looked at what the algorithm did based off time and price, right? Based off of this 930 opening range and price gave heavy displacement, and this is the first imbalance that was created based off that displacement during a specific time of day. That's why I drew that box out. So when price comes back into that box, right, depending on if it's bearish or bullish order flow, now I'm anticipating this box to be used as support or resistance. If it's bullish order flow, I'm anticipating it to be support, right? If it's bearish order flow, I'm anticipating it to be resistance, right? If I'm anticipating it to be support, I want to buy off of it when I'm in the discount of a range. If it's going to be resistance, I want to sell off of it when I'm in the premium of a range, right? Did you get it? Get it? Get it? Ooh, my secret. All right, man. All hearts and minds are clear. Amen.
Yeah. Appreciate you, Jeff.
All right. Appreciate y'all, man, for pulling up. And for those that's in the gang who missed the um pre-market analysis yesterday, I think it was, we came to the overall decision together as a trading family and community that the live streams will continue to be saved on my channel for those who really enjoy going back and taking detailed notes pausing the stream and really putting in the extra work. So the live streams will stay active um, on the channel. And with that, until the next time I decide to, oh yeah, if this first time tuning in to Tim's Tidbits, you probably still not here yet. But if you are still here, go ahead and press that like button. If you ain't subscribed, go ahead and subscribe. All that stuff I'm supposed to ask y'all to do in the beginning and share it with somebody who you think might get something out of this, man. When you share it with them, hey, tell them, give them like some notes so they ain't got to sit through the whole thing and try to find the gems. Make some notes for them and tell them at this time, Tim talk about this. At this time, Tim talk about that. Give it to them with your journal notes that you made. You know what I'm saying? But man, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That just means big spot if you don't hablo Espanol. Y'all be safe out here in these strange streets, man. Gone. Yeah.